welcome to this edition of Closing Trades with me, Aisha Faredi, Nikaj Dalmi in the studios. And today, one has to say, is definitely a lot different than what we've been seeing of late. While the market starts off temper and then you have all that weakness trickle in. Yes, sure enough, we did dip a fair bit into the red, but from there we've recovered. The only good thing about today, while there's no great meaningful rebound, so to speak, from yesterday's 200 DMA, the only good thing is that we're in a much narrower band as opposed to the kind of wild swings that we've been seeing off late. So right now, of course, we're back at square one, back where we started, around that 23,600 odd print for the Nifty futures. BPCL on news of its perhaps ouster from the index to make way for some of those new F&O interest, inclusions. That is one stock which is definitely under pressure from the word go today. The Tata Consumer, Unilever, Britannia, Nestle, the entire FMCG pack is seeing weakness once again. What's actually holding up today? Reliance, holding up 1.5%. Eicher Motors, irrespective of how the operational numbers didn't quite match up with the street estimates. The con call takeaways indicate that there is a shift focus now towards growth. There are going to be product interventions, higher ads in the festive season. Post-festive demand is higher than pre-festive, and I think that is what the street is also drawing some inspiration from. Needless to say, the entire Motown pack has been so beaten down that maybe the worst was already priced in ahead of the numbers. Also, the management saying that there has been good traction in terms of inquiries, the walk-ins in the month of November, the wedding season is aiding post-festive growth, healthy retail momentum is what they are also seeing in exports, and I think that is what's keeping the stock warm. The new F&O stocks, they're of course in a tizzy as well. Look at Zomato, look at Jio Financial Services as well. They were the top Nifty contenders in any case. They're the ones which are looking pretty good in trade today. Zomato holding up very smartly, so is Jio Financial Services. HAL, by the way, came out with its numbers. Hindustan Aeronautics, there's of course a management rejig as well, which has also got announced. But the profits have jumped up higher by about 22%. Their EBITDA margin, 27.4% is where it's come in at, with an uptick of about almost 34 basis points. HAL, mind you, was one of the few defense PSUs that fell a lot less relatively than some of the others in the pack. Right now holding up at that 4,092 mark. But yeah, the question is whether we're out of the woods or not, and is there more weakness in store?
You know, you were very, very oversold. This dinky bounce actually was around the corner. What happens from here, I think, is the more important point, which is that, you are off from the day's high, up from the day's low. It's 16 point in a market which is very oversold, and markets are not showing any signs of strength which could be called as very durable. Is it time to start buying? See, why is easy to identify. Why are markets down? FIIs are selling, dollar is up, earnings are bad. Where we are headed, it appears that we could be in for this long winter, maybe prolonged kind of an weak price action. And what do you do, I think, is the most important thing. So let's address not the why, where and what with Sandeep and with Naresh. So Sandeep, the why, hum kyun gire hain, we know it. Where are we headed and what should one do? Let's address both that. Let's address that. So that's the easy part. See, the why is easy. Where and what is difficult?
No, it's not difficult. So I think we can't be over bullish and markets are rising in a straight line. We can't be over bearish and markets are falling like they are falling right now. So I think pockets of value have emerged, especially on the large cap side, and that's what we need to capture at this point of time. In my view, market downside, let's say hypothetically, there's aggressive selling which is not absorbed, and I think somewhat more. The market can fall maybe 2-3% more, or maybe they would not. I don't know. But we are more near value emerging on the large cap side rather than trying to say that market will fall another 10%, which is the kind of theory going around now, which is always there. So when markets are rising, no one wants to be negative, and markets are falling and no one wants to be positive. That's not how investing should be done ideally. So use the time to invest in large caps to start with as of now. Maybe some select mid caps which have delivered very strong numbers where visibility is very strong, and hold them, possibly expecting maybe some more minor dip, but upside being much more than downside.
Okay, Naresh, maybe you have the precise answer. Where is it that we are headed? Because a lot of people, we were chatting with Lawrence Belanco as well from CLSA. He's also seeing downside levels of even 22,800.
So the point is we are oversold. We've come down a good 10% plus from the highs. We're back to the 200-day moving average. We're back to the prices pre-elections almost. So if you look at the Nifty, we were at 23,100 before the elections. On opinion poll day, we were at 23,300. And in the same space, we are now closer to 23,500 odd levels. But a lot of stocks and indices are back to 22,000 odd levels also, which is almost like election day lows. So if you look at the bank Nifty, we are back into the territory where we were on the day of elections. Then if you look at stocks, you look at Reliance Industries, it is lower than where it was on the election day. So there are opportunities across the board. Whether we see a sharp bounce or we see a consolidation at 23,000 to 23,500, this is the zone 23,100, 300, 500, this band. Somewhere we get a strong bounce from. And post that, is the bounce stronger towards 24,500 or higher is what we need to see. But overall, given the oversold condition, this is the point of time where you want to be selective and look at buying rather than selling here.
Sandeep, is it fair to assume that the news flow now incrementally for earnings, for demand, everything will improve? And I'm just going to put this point out for our viewers here, Sandeep. Number one, government spending should get better. Number two, festival demand has been decent. Number three, monsoon effect would kick in. All these factors were not there in first half. So if second half is better than first half, which is what it appears, then what happens to the market?
The second half should definitely be better, and all the points you made are very relevant. One, it was expected that second quarter will be weakish because first there was a huge heat wave, then there were delayed monsoons. So crop, like you rightly said, the crop harvesting and sales by the rural farmers, etc., was delayed, and that delayed the rural cash flows also, which also got reflected in the numbers of some rural lenders, etc. But if you look at the overall picture, like on the consumption side, things are still slow, at least on the FMCG side. But on the durable side, it's held on reasonably. Like it's not been so bad, and October apparently has been good for most players. The other big factor in India which drives consumption of many products is the whole marriage season. So if you look at the marriage calendar, like there were hardly any marriage dates in the last few months. Next 2-3 months, apparently there are going to be 48 lakh weddings in India. That by itself is a huge driver of demand, and it's estimated that spends in this could be more than 6 to 7 lakh crores. So there are negatives, there are positives. On balance, markets post correction are reasonably placed, and I would think that from here on, plus minus couple of percent here or there, market should start stabilizing and building up, and then we have to see how 2025 will be. 2025 should be decent, I think. 10 to 12% market Nifty growth is likely.
So Sandeep, have you been buying already? And if so, what's the list like?
Yeah, so right now focusing on large caps. So among the stocks, taking into account the results and the correction which has happened, I think stocks like Reliance, Mahindra and Mahindra, L&T, to name, I think these three come to mind, Bharti Airtel. All of these seem to be decently placed. Some of the larger banks also fine, like Axis, ICICI, etc. And looking to also buy some consumption plays if they correct a bit more.
What exactly within consumption, Sandeep, are you looking at?
I think if you look at HUL around 2200 if it comes, because from 3300 if it falls to 2200, I think from there we can look at a 15-20% gain from. So from a large consumer company, 15-20% gain is quite good. Dabur sold off a lot, and I think that's also coming into value zone. Godrej consumers. So I think a lot of the FMCG companies are slowly moving into value zone because most people are assuming that the weak demand conditions will keep on persisting. So demand recovery has got postponed, but ultimately at some stage it will come back, and then you won't get these stocks at near 52-week lows.
Interesting. Okay, Sandeep, hold on to that thought. Lots more to probe you about on that view on consumption, staples in particular. But we're going to do that after this very quick break. Back with closing trades right here on ET Now. We've got Vinay Rajani as well joining in. Naresh Mirani still with us, and so is Sandeep Sabharwal. Sandeep, just coming back to you to the point that you were making that some of these consumption staple names in particular are looking attractive after the recent correction. What I wanted to understand is whether this is a tactical trade still, or would you actually ride along and invest in these names for the long haul?
So what happens, Asha, is that these stocks become cheap enough, you buy them expecting a particular gain. Let's say you expect a 15-20% gain from a relatively safe sector. But then as things evolve, so let's say we bought it under the assumption that there'll be shallow growth revival. But then growth revival actually gets entrenched and these companies actually start doing better than what you expected. Then you hold on for longer. So I think it's very tough to predict at this point of time, because ideally consumption revival should have happened now after 2 years of slow consumption, but it has not happened still. So we have to see when it actually gets entrenched.
To a couple of stocks which in a sense have been really patronized by traders. Vodafone, the bottom has been knocked off. They raised a lot of equity, knocked off the debt. AGR issue has come, but the stock has gone from 17 rupees to 7 rupees. Actually 19 rupees has become 7 rupees. Yes Bank, after the promoters in this case, which is SBI and some P guys, this is one retail dominated stock. I think the 52-week high was 25, 26, maybe 30, I don't remember. But it has lost its bottom. The third is Suzlon. Naresh, I go back to these three stocks because it is relevant for the audience here. Suzlon, Vodafone, and then where exactly is Yes Bank headed?
So if you look at it, out of all these names, only Suzlon makes sense because that's the one which has totally turned around. Today also the stock has recovered a bit, is up for 4-5%. But overall, if you look at what has happened with Idea and Yes Bank, there has been no major change. We've broken down various price points. There has been no takeover of Yes Bank. There has been no Idea not holding on to the price points. So overall, in terms of the whole cycle, it is only Suzlon which still makes sense.
Vinay, what is your view on the market? Are we nearing a bottom, or this is a classic dead cat bounce which may not last?
Yeah, so positional trend is definitely down. Nifty has registered a fall of almost 2,800 from the all-time high, and it is right now hovering around its 200 days exponential moving average, which is everyone is tracking. So on the short-term parameter, it looks a bit oversold in last 6 trading sessions. Nifty has fallen almost 4%, and some derivative data points suggest me that there should be some pullback from current levels, because if we go by the put call ratio or compared to yesterday's data, put call ratio has actually risen while Nifty is still down, and there's sort of positive divergence on the some oscillators that we have been tracking in intraday that suggests that there should not be aggressive selling coming from here, and there has been a good put writing happening at 23,500 and 23,400 strike prices. That gives me an indication that after 6 days of consecutive fall, market should recover from current level. So I'm not betting on the bullish reversal, but yes, pullback cannot be ruled out at this level. We are right now oversold. If we go by the breadth also, breadth is also positive. Advanced decline ratio is also positive. So from on Monday, I'm expecting recovery in the market. After 6 days of consecutive fall, we can expect some pullback. So I'm not betting on bullish reversal, but yes, from 20 through 23,530, we can go to 23,800 in the coming sessions.
We've been discussing what to buy, what not to buy in this market. Where do you think the excesses in the market, they still hold true and you'll not be a buyer? Sandeep?
Yeah, so I think this entire commodity space which ran up just because China announced some measures which always are going to fail because the structural issues are there. So I think people should avoid commodities on the PSU side. On an overall basis, I think still the retail and HNI participation, etc., is very high. So I think that's where we could still see time for the recovery to play out. So I think these two segments come clearly to mind, and many speculative small and mid caps where it's tough to define each stock by each stock, but then there are a lot of speculative segments in the market where the valuations still are very, very excessive.
Also, Sandeep, since we're talking about some of the resilient pockets, what is it that you're making of this IT trade which is playing out? Of course, it didn't quite participate in the, bull run up until last month or so. But now the recovery that's playing out and the show of resilience, you think it's sustainable for IT services, the big ones especially?
It should sustain, and because I think they'll get some support from a weak rupee because of the strong dollar, which they have not got for the last few quarters. And on top of that, I think the US administration, which will be coming in, it will have strength across the board, the president, same party in the House, same party in the Senate. So I think there could be momentum in the US economy, which could drive uptick in the businesses of IT companies. I think this sector as a whole could sustain, yeah.
1857, that is the HCL Tech stock for you. Nifty is struggling to make a comeback, which is very, very important for us to mark out that an oversold market is hardly coming in the green. I just want to remind everyone that just like markets do not go up in a straight line, they do not come down in a straight line. It is not that there is only darkness at the end of the tunnel. And 3 months ago, it appeared that there is never going to be an eclipse in the world. Both things are too good to be true. Right now, markets are factoring a lot of bad news ahead of its time. And 3 months ago, markets were ignoring all the possibility of a bad news. This will also turn because the fundamentals of the economy, where demand, interest rates, global economy is headed, I think all those interplays will start settling down. Sandeep's making a point on commodity. Look at that entire China trade, Sandeep. I mean, 2 weeks ago, हम कहते हैं ना, कान पक गए थे सुन के that money is going to China. Now money has started moving out of China. Before we started acknowledging that money is moved into China, money started moving out of China. So that long-lived China trade is also over.
Yeah, it had to, but it's just that the valuation in China is still very low. So I think that's the only trade which is there. If people are playing a Chinese economic recovery, that's not going to happen. But if you're playing a valuation play, I think valuations are really cheap in China. That's the only play. In the last 1 month, if you see, Hang Seng has fallen 15%, whereas the Nifty is down around 5%. So I think that's the reality of the entire China trade.
Just looking at what the screen is looking like right now, Eicher Motors, of course, is that very strong contender today. There's Samvardhana Motherson holding up 3.5%, Balkrishna Industries up 3%, Apollo Tyres up 4.5% right now. Sandeep, in at least bits and stats, that auto ang trade seems to be coming back. Are you convinced though that they're kind of out of the woods and the post-festive season demand as well is going to be intact?
If you look at the company managements, they have been somewhat circumspect. Although the festival season demand in October was very strong and that's cleared out the inventory. But post that, most of the managements are not very aggressively pushing for strong growth, except for Mahindra and Mahindra, which has talked about strong growth both in its utility vehicles as well as tractor segment. So I think the proof of the pudding is still out. Let's see. I wouldn't be so negative. I think I would be somewhat more positive than most company managements because One, the harvest season and the cash flows are to come in, and that could drive growth. And secondly, we could also see that the entire demand coming in from the huge marriage season that could also drive demand. So after a 25-30% fall in some of the companies, I would think that we shouldn't be so negative.
On the show as always. We'll let you go on that note, but here's a big story coming in, and an ETNA exclusive at that, and the government sources are telling your channel, in fact, allaying concerns around the ongoing correction in the market. Let me in fact take it across to my colleague Sumit Chaturvedi, who's been, running the calls across the government corridors to try and get a reaction of not just the Trump rally, but the disconnect in India markets and the kind of FPI sell-off. Sumit?
Well, government is confident about the current situations as far as market correction is concerned. Well, their top ministry sources, finance ministry sources, are of the view that it is correction in the normal course of time. It's a healthy correction that can be called, and there's no need to panic. Well, generally what happens when there is a correction for a long time, there could be in the corridors of power, there could be meetings or maybe deliberations. This time it is not happening. Well, it's quite evident that government is confident that it is not a correction which is something that can cause panic in the government circles. On the other hand, well, the recent issue or the recent development of a US presidency, well, that has been taken note of. However, the government is in wait and watch mode on that. The only apprehension in the top government circles is the sudden tariff war that can happen as a result of this presidency. However, they are also of the view that there could be more opportunities than worries as far as the new presidency, the upcoming Donald Trump's presidency is concerned. So these are the top, the views of the top officials in the finance ministry, which are clearly confident FIIs are going to come back, and it is the correction which is a correction in the normal course or healthy course. It is not something to get panicked about.
Panic, that's the message coming in from the government, loud and clear, that this is a routine correction. There's nothing orchestrated or nothing alarming about it. Sumit, thanks for that update. That's the word coming in from the government right now. In fact, we're halfway through the mark, closing in for the week. In fact, remember, tomorrow is a trading holiday for our markets, but the global markets are going to be operating. So let me take it across to our chartists and get in some closing strategies on that note. Vinay, let's have your list first.
Yeah, so I would like to go long and short both. So one recommendation on the long side is the City Union Bank, which is also part of F&O segment. So City Union Bank, which is trading around 173, it has formed actually an inside bar candlestick pattern, which is usually a short-term bullish reversal pattern. So it looks like a short-term reversal, and the primary trend of the stock is already bullish. So that is why I'm considering City Union Bank as a long trade. Around 173, one can go long. I'm suggesting a trading stop loss at 169. On the higher side, I'm expecting a target of 179. The second pick would be on the short side from the oil marketing company, which is BPCL. So BPCL has broken down below the consolidation, has violated the 200 days EMA support also. So looks like that it is headed lower. So BPCL November future can be shorted at 297. Stop loss can be kept at 302. And on the downside, I'm expecting a target of 290.
And Naresh, what about your ideas?
So that would be a buy on Reliance Industries. The stock has been holding on for the last two sessions, corrected 20% from the top. Would keep a stop loss at 1255 and expect a bounce back here.
We'll take a very quick break, but when we come back, we'll have a fundamental expert as well join in, talk about where is it that they're buying in the markets right now. And we'll also get to sound bites of CLSA's Lawrence Belanco as to what kind of levels now he's anticipating for India markets. Back with closing trades, the choppiness for the market continues. We have definitely recovered from the lows of the day, but we've given the top as well off. So still circling around that 20 3,600 mark. iShares continues to be a star performer today. Hero MotoCorp as well. Coupled with that, Reliance is giving a good leg up to the index. But on the flip side, the entire FMCG pack is under pressure. L&T, SBI, Tata Steel, ITC as well, underperformers in trade. So where is the market headed given the ongoing correction which is currently playing out, and is there more to this sell-off? We spoke with Lawrence Belanco from CLSA. Here are his thoughts on the same.
We're not seeing any evidence of the 200-day holding and providing a tradable entry point. The next target we have is down at the 22,800 area. But like the test of the 200-day yesterday, if we don't see any evidence from our momentum indicators, is that we think that the risks will still remain to the downside. So, as price action sits right now, I think investors have to be patient and let this corrective run its course rather than trying to sort of catch that falling knife. We haven't seen that slow to provide an opportunity at this point in time. We've published and we've looked at the longer term trends for the Nifty that you've had, and this is the third bull market phase of the COVID lows that tend to last over a decade. And the upside target we get from those structural moves that we've seen historically for the Nifty is that we get over 37,000 as an ultimate upside target towards the end of this decade. So we still think there's further upside, and that's why I think we do want to be looking at opportunities to increase exposure again, but we're not seeing the evidence to jump back in. So yeah, 30, just over 37,000 is where we see that longer term target for the Nifty in this phase of the bull market of the COVID lows.
Lokpriya joins us. Chakri, what is your view? Are we in for a long winter or we are nearing the end of this decline?
Good afternoon. Thanks for having me. I think, the market is down about, Nifty is down about 10%. Earnings are down, if you look at the various sectors, so 10 to 15%. And on the other hand, the stocks, some of the PC stocks are down 40, 50%. So from at that perspective, I don't think there is much downside, but what is clearly needed is some kind of a catalyst for earnings to revive upwards. Now, that catalyst can come from an RBI rate cut. I know people are talking about it being postponed to February, but RBI has increased rates by about 250 basis points, very short period of time. So, consumers and companies need to see the other side of the coin, that is the cut-off rates. So while food inflation is high, I think if there is a December cut, that would provide one of the catalysts.
I go back to Zomato. Naresh, it's a bull market stock. 50 became 300, 300 became 240, today it is at 269. Is there money to be made in Zomato, Naresh? It has corrected 30%. Is that enough for a bull market stock like Zomato?
So the stock is really not corrected as much. If you look at it, the highs were around 300. Now we're at 269, just a 10% correction. So too early to get into a stock which has gone up 5x, 6x from the lows. So there's a good possibility the stock can consolidate. Overall, the trend has not been broken, unlike in a lot of other mid-cap names. The last low for the stock back in August, September was 240. 240 was the low in October as well. So out here, till the time it holds 240, the trend still remains up. It could consolidate between 240 to 300. At current levels, the risk reward is not great to buy. But if we see a much larger correction, then maybe one could look at it.
Chakri, Swiggy is better or Zomato is better? I'm not talking about service. I'm not talking about preference or menu card here. I'm talking about stocks.
Yes. I think, Nikunj, clearly, I think Swiggy is a far lower valuation today. Trades at, I think it trades at 7.8 times is what Zomato trades at revenue. This trades at probably about 3 times. So both are similar size companies. They have similar market share. Only the things, Swiggy is slightly less profitable. So I think the valuation differential, could be made up. So I think clearly one can buy Swiggy here at current levels.
Okay, just looking at some of the names right now, while Eicher Motors, of course, is holding out, Apollo Tyres is looking good. Indian Hotels has jumped up a good 3.6%. And mind you, Indian Hotels is one of the few stocks that hasn't quite, given up in the recent correction in the market in the last 1 month. I don't know if we can bring up the 1 month chart. That's a fresh peak on that stock. 742 is where it is. in the last 1 month, in fact, it's gained about almost 4% odd. Chakri, what are some of the resilient to market correction names, and I'm sure Indian hotels will make it to that list, that you've spotted so far this earnings season?
You're right. Companies like Indian hotels, because they cater to the higher end of the income segment, which has not been affected. Their spending remains strong. So I think clearly one can buy. Second, now IT, information technology, with Trump coming back and US corporate tax cuts being talked about, that increases the discretionary budgets for IT budgets for companies, which is good for Indian IT.
Well, what do we have? We have a market which is looking, it is not falling. These days, Nuresh, if market stops falling, that's also a relief, right? I mean, forget about gains. Nahi gir raha is also good news.
Yeah, so that's the first signal which we get in the downtrend.
And Nuresh, for the first time, you smiled today. Nahi gir raha hai, wo bhi achhi news hai, right?
Yeah, so that is how it is.
Kunal tells me to make Nuresh smile is impossible.
Yeah, so it's the market which makes you smile most of the time. But as of now, it's a tough time. But if you look at the price action today, we've seen heavyweights hold on. We are seeing a doji formation on the candlesticks, but it needs a follow-up the next day to cross the previous day highs or the next day highs. So for now, we watch out for 23,750, 23,800. If that breaks next week on the upside, then we get a short-term reversal.
Much like Indian hotels, I don't think Zomato as well has fallen a whole lot, right, in the recent correction in the market. And now, of course, with its F&O inclusion, this chatter that next it's going to be eligible for a Nifty inclusion as well, perhaps. What are you reading on the charts of Zomato at 269?
Yeah, so Zomato definitely looks good. Recently, it has surpassed the crucial moving average also, and the correction was limited. It found support around 240 and bounced back sharply. So from the new age tech company, it is one of the strongest companies. The technical setup is quite good. It has been resilient, and it looks like that it is headed higher. 285 is the next resistance I see for the stock, which was a swing high, previous swing high. And the yesterday's low becomes the crucial support. So for the short-term traders, I would suggest support at and stop loss at 254, which was the yesterday's low. It becomes the strong support now. On the higher side, as I said, 285 is the next resistance for the counter, and it is likely to outperform like Indian Hotels has been doing. Zomato is also that kind of setup I can see on the charts.
Okay, now we're talking about the real big beneficiaries of this F&O inclusion. 40 plus names, 2 or 3 are the odd ones out, but 2 or 3 ones are the ones where excitement is going to only increase. Names like Zomato, Jio Financial Services, can they really make it to the Nifty? Can they really make it to the Sensex? Well, Nomura feels that. And Sumit's got details on what the Nomura's view on the recent F&O inclusion is.
Well, yes, 45 new stocks will be a part of the F&O basket from November 29. Now, this expansion is quite significant given the fact that since 2015 till now, only 100 stocks were added. And now we are seeing a 45 stocks addition in just one go. So, a few stocks that we need to keep an eye out for. Firstly, it's Jio Finance and Zomato. Now, both these stocks were among the top key candidates to be included in the Nifty 50 semi-annual review back in September 2024. But given the fact that both these stocks were not part of the F&O stocks, they weren't included in the Nifty 50. Now, with this inclusion coming in, both these stocks now have a very high chance of getting included in the Nifty 50 index, which in the next review, which will happen in March 2025. Now, as per Nuvama alternative, if Jio Finance and Zomato get included in Nifty 50, then it could replace either 2 of these 4 stocks, that is BPCL, Eicher Motors, Hero MotoCorp and Britannia. Now, if they get included, then the inflows that we could see in Zomato and Jio Finance going forward could be anywhere between 400 to 660 million US dollars, and the outflows in the for BPCL, Eicher Motor, Britannia and Hero Moto could be anywhere between 240 to 260 million US dollars. So keep an eye out for these stocks. Now, as per IFL alternative reserve, Zomato could also get included in the Sensex index, and this review will happen in December 2024. And if it gets included in the Sensex, then the inflows could be anywhere between 400 to 445 million US dollars as per IFL alternative. Now, they also analyze the stock performance of the stocks that get included in the F&O basket since 2015. Now, they're saying that the number of stocks that have got got included in the FNO since 2015 is close to 100, and the average price movement has been positive 3.2% for these stocks. Now, the percentage of stocks that have seen a positive movement from the announcement date till the inclusion date is nearly 70%, which means that 70 out of these 100 stocks have seen a positive movement since the announcement has been made of getting included into FNO until the time the actual inclusion has happened, and nearly 49 of these stocks have seen a positive move after 20 days after getting included in the FNO basket. So keep an eye out for these stocks that are getting included in the FNO. We could see some positive price action in them.
Those are the FNO inclusions. Let's also take stock of how Reliance has actually panned out in the last 1 month or so, because this is one leadership stock which has corrected a fair lot in the last 1 month. It's almost seen a 6% correction and a fair amount of market cap loss as well. 1268 is where the stock is in today's trading session. Shakri, what would it take for Reliance to make a meaningful comeback? And after the recent correction, does it become a buy now?
The Reliance as a stock is looking good right now, simply because, the sum of the parts valuation is in its favor. Many of the businesses are not reflected. At the same time, I think one of the reasons why the stock has corrected because of the huge volatility in prices, oil prices, which has, kept the refining margins in a very suspended animation. You're not very sure in their hedging policies, which most companies have this problem. So given all this, I think, with the current outlook of a revival in the US and the whole of Europe is also cutting rates. So therefore, reviving economies are always good for oil and gas stocks, along with its other businesses.
It's a market where Reliance is down in a very meaningful manner. Naresh, do we have a bottom in place finally for Reliance? I mean, is 1250, 1270, 1280 the level at which you should be a buyer in Reliance?
So at current levels, the risk reward is good. The stock is corrected 20% from the top. It's much lower than where it was in the last 1 year. It is almost back to the same prices as it was in 2022. So the return for the last 2 to 3 years is zero. Out here at 1250 odd, I would expect a bounce back to 1400, or it could also be a major bottom for the stock. So at current levels, for a long-term investor as well as for a short-term guy, the risk reward is very positive.
What is your view? Do we have a final bottom in place for Reliance? Vinay?
Yeah. So it's very difficult to say. Right now, the overall trend is still bearish. We are expecting a pullback. So follow buyings and the kind of reversal we will see. We will gradually review the overall trend. But right now, it has fallen around 20% from its all-time high. So the positional trend is still weak. There could be a pullback, and we have to see whether those pullbacks are getting into the reversals or not. But as of now, I'm not taking big bet because markets are also not that supporting. So I'm not saying I'm not betting on the reversals, but yes, pullback can be expected with the yesterday's low as a stop loss, which was 1249. So that stop loss should be there for traders, and we can expect some pullback rally to come.
Okay, that's the take coming in on Reliance Industries. Chakri, you think autos has had the worst, and have these stocks bottomed out? Just taking a leaf from the way Eicher has reacted after its earnings today.
Auto as a sector is down anywhere between 15-20% in the last 1 odd month on well-known fears of slowdown in consumer demand, demand across commercial and consumer. But I think, now, for instance, Maruti trades at about 22, 23 times. Hyundai trades much lower. It's probably trading at about 17, 18 times. TVS Motors slightly higher. But, I think they've all kind of bottomed out, and whenever interest rates will be cut will be the next catalyst. But I think, pretty much one can start buying these stocks now.
Interesting. That's the take coming in on autos. By the way, Hero MotoCorp as well, after the recent sell-off in the stock, has actually seen a bit of a rebound. It's slated to come out with its numbers as well. So let me take it across to our research analyst, Sharad, who's waiting by to tell us what the ET Now poll is pricing in for Hero MotoCorp.
Well, yes, one of the last earnings in the Nifty and the auto pack is Hero MotoCorp, and overall expectations for the September quarter is that revenue is expected to jump almost 7%
on a year-on-year basis, coming at more than 10,200 crore rupees, while also PAT is expected to jump 9% Margins also, slight bump up is expected of roughly 100 basis points, coming in at 15%. Now also the factors to watch out for importantly would be the demand outlook both in the domestic as well as the international space, and also what would be the important timeline launches coming in for their vehicles as well. Premium segment growth is something which the street is expecting to drive better margins, and the revenue growth expectations which is kicking in for the September quarter includes a volume growth as well as increase in realization. Now margins are also expected to increase because of better pricing mix. Also importantly, the improvement of share in the 125cc segment augurs well for the company, and that would drive a better product mix as well, and margins are likely to remain stable if we compare them on a sequential basis, as there is a stable input cost and a product mix.
Another forgotten stock is Bajaj Housing. Chakri, good time to revisit Bajaj Housing. The IPO euphoria certainly has faded away.
You're right, the euphoria is faded away. But I think there is no catalyst in terms of what will make a home buyer that acceleration that is needed to see an increase in business for housing, for housing finance companies. That is not evident yet. So I think it all comes down to this interest rate cut. So I think we would wait for that.
Naresh, for an options trader, what is a good strategy? Buy out of the money puts, buy in the money put, buy out of the money puts, or buy in the money calls? Because we could be in for a swing. I mean, the market bounces back, then out in the money calls would make a lot of money. If markets go down, that means out of the money puts will make a lot of money, because then everybody will think that we will head to 22,000, 21,000 and thereabouts.
So safer strategy would be to write the at the money puts and buy some hedges. So maybe write 23,500 puts and buy 23,000 put as a hedge, so that major downside is taken care of. But overall at current levels, even if there is not a sharp bounce back, we could see a pause going forward into the next week, at least given today's price action. So a better strategy is to do a put spread.
Okay, that's the take coming in right now on these names. Want to take in some mid-cap strategies as well. Vinay, what would you opt out for? Okay, Naresh, let's get your strategies.
So I'd still stick to large caps, which is where I would expect a bounce back in Reliance as well as ICICI Bank. Both these names are back to the support levels. ICICI Bank had good numbers and has come back to the same prices. So there I would expect a bounce back towards 1280, stop loss to be kept at 1240. Second would be Reliance, which is a buy at current levels with a stop loss at 1255 and a target price of 1300.
Those are some BTST ideas coming in. Stick with the large caps. That's the bias really coming in right now. Reliance as well as ICICI Bank. Chakri, what about banks? Where is it that you would be adding perhaps more to your existing portfolio from amidst the entire banking pack?
For banking and financial services companies, I would add, Power Finance and REC. Both have corrected quite a bit. They now trade at under one-time book. Their growth trajectory are intact. Their NPAs are intact. Their NIMs continue to be good. They sold off with the rest of the pack. Sufficient amount of valuation comfort. So by REC, Power Finance.
PFC, those are the buy calls coming in from Chakri within the BFSI pack. Naresh, how are REC, PFC looking like on the charts? Because they too have sort of cooled off in the recent correction in the market.
So PFC saw an uptick on the day of results. But with this market, what we are seeing good results, see a pop only for one day and then they fade off. The only difference is the stock has not been breaking 450, 55 levels, which is where it was pre-results. So the structure is positive. The stock has made 3 bottoms around 430. So as a positional view, one could keep a stop loss at 430 and would actually expect a move back to 550, 600 levels.
Right. Okay. In the meantime, let's get you another ET exclusive. And here's a big setback coming for Ola Electric. The CCPA orders a detailed investigation into the deficiency in products and services. In fact, my colleague Samir Dikshit is back with us to get us more exclusive details on the same.
So it seems that there are more trouble for the EV player Ola Electric, and it is because that CCPA, the Central Consumer Protection Authority, has ordered a detailed investigation into the matter pertaining to Ola Electric. The investigation has been ordered to DGBIS, and the letter or the order has been dated 6th of November this month itself. And this detailed investigation pertains to the allegations that there is a lack of or the deficiency of the product and services. So if you remember, on the NCH, the National Consumer Helpline platform, there has been more than 10,000 complaints that was registered, and based on which a show cause notice was served to Ola Electric. And on 21st of October, Ola Electric in its response said that 99.1% of the complaint has been addressed. But when CCPA cross-examined, checked the claims that has been made by Ola Electric, it was found that these claims largely they are false. I mean, the sample size that was taken up by CCPA, and when these complainants were approached, surprisingly, 79.2% of the complainants, they mentioned that the problem or the issues are still, it is persistent, it is still there, and the complaint has been forcefully closed by Ola Electric. So that's a big allegation that has been raised. Based on this, this feedback, now CCPA has given a detailed investigation order to DGBIS, and what we are picking up from our sources that BIS will carry out the technical investigation, and they are likely to submit the report to CCPA in next 15 days. And when the investigation report will be submitted to CCPA, they will further examine it. The process suggests that once again Ola Electric might be given a chance to share their side or what sort of response they have to give on the investigation report. And if things goes against Ola Electric, then Ola Electric may face many major setback, which may include even the recall of the vehicles or the two-wheeler EV that Ola Electric has been selling in last couple of years. So that's the big development in the Ola Electric case, that a detailed investigation has been ordered, and this is based on the complaint that has not been addressed by Ola Electric, but yes, they have mentioned that largely to 99.1% the complaints have been addressed. And when cross-examined, CCPA found that these claims were not satisfactory, they were not correct, and based on which the detailed investigation has been ordered by CCPA to DGBIS.
Right, we'll leave it at that. Well, it seems like Ola's cup of woes continues to be brimming, 1.5% lower for Ola even now. But begin to wind up for the day. Let me hand it over to Snehi then and wrap up how the closing trades have panned out. Snehi?
Absolutely. Let's take a look at how today's trading day has panned out then. And if you take a look at Nifty 50, it's been a rather flat trading day. You know, there is still a chance in the last 3 minutes we may edge over to the green, but seems unlikely right now. Very flat, just an 8-point cut coming in on Nifty 50, but that's something to be happy about after the cut that we've seen in the Nifty coming in yesterday. Still managing to hold on to those 23,500 levels is where the Nifty is. If you take a look at Sensex, in tandem with the Nifty, rather flat is where the Sensex is, but managing to hold on above those 77,600 levels for the Sensex. Let's take a look at the broader markets, because they have been the key strength drivers in today's trading session. You have Nifty Mid Cap still trading with gains of more than 0.5%, and Nifty Small Cap is the clear outperformer in today's trade. Almost an 0.8% uptick coming over there. At one point, Nifty Small Cap was was higher by 1.5%, but has given up all those gains. Nonetheless, it's in the green. Let's take a look at the advanced decline ratio. It seems to be rather balanced today compared to how we've always seen the favor in the declines. Today, the favor is in the advances, but rather balanced coming in between both of those advance and decline ratios. If you take a look at Nifty Bank, that's also managed to hold on to the green, though some selling pressure has been seen on banks today as well. So 0.2% uptick coming in on the Nifty Bank index as well. If you take a look at some individual gainers and losers, then Eicher Motors was your big Nifty gainer today. That's something that has helped the index stay where it is rather and not lose much momentum. Weak set of numbers coming in, but management commentary was good. Brokerages have cheered on this stock, so it's looking good for Eicher Motors. Hero Motor then, numbers are expected anytime, and 2% uptick coming in on Hero Motor as well. HDFC Life, Reliance, Kotak Bank, SPL Life, and even numbers for Grasim expected. So all of these stocks have in fact done pretty well on the index. What has not done well today is the entire consumption space, because Nifty FMCG has been your biggest loser in today's trade. And on the back of that, you have HUL, Tata Consumers, Britannia, top Nifty losers all coming in from the FMCG pack, followed by BPCL. You have Nestle once again, NTPC, IndusInd Bank, Power Grid. All of these are your top Nifty losers. But if you take a look at some sectoral gainers and losers coming in today's trade, like we told you, Nifty FMCG was your biggest loser today. PSU Banks was the second biggest loser in today's trade. However, Nifty private banks seem to have done well today, still holding on to gains. So it's the PSU part of the banking space where we've seen some pressure coming in. Nifty Pharma, Energy and Metals dilly-dallying between the red and green. And if you take a look at top gainers on the flip side, Nifty Realty surprisingly is your big gainer in today's trading session. And when it comes to Nifty Realty, you have a whole host of names like Oberoi Realty, Brigade, Prestige, DLF, Lodha and Godrej Properties that have done pretty well for Nifty Realty in today's trade. Followed by that, you also have Nifty Auto, Nifty Bank and Nifty IT that have managed to sustain some hold on to some footing today towards the positive territory. Now, if you take a look at some other stocks that were in focus, you had Mishra Dhatu on the back of that profit expansion coming in. Shilpa Medicare held up pretty smartly in today's trade. You had Jio Financial and Zomato. Now, these two stocks were in focus on the back of that FNO inclusion and the potential inclusion in Nifty 50 coming in the region of March 2025. So those are some key stocks to watch out for in trade today. Other than that, you had SpiceJet. They have settled in a big dispute at a very heavy discount. So positive move coming in on SpiceJet as well. Garden Reach, Torrent Power, all of these stocks were in focus on the back of earnings. Varun Beverage in focus on the back of their QIP fundraise, which from sources we understand has seen good response and is close. So Varun Beverages was in focus, 2% higher on that stock as well. Tata Power, Vodafone Idea, Ola Electric on the issue you just saw, and Surya Roshni has now also approved a bonus issue in the ratio 1:1. Lots of stocks in focus, but well, yes, that's where we've ended for the Nifty in the day. 23,500, we've managed to sustain those levels. Absolutely flat for the Nifty and Sensex coming in, but luckily that's how we are shutting shop for today.